All right, David Delgado here with Freedom Choice Lending. On this video, we're going to go over credit. A lot of times I get the question like, what credit score is required to buy a home? I'm going to cover all that in this video. So if you like, please share this video. And if you like what you're hearing, if you like more information about more topics in the space of buying a home, qualifying for a home, if you're just in the interest of buying a home, if you're in that process, I invite you to subscribe to our YouTube channel today. And also, please post any feedback, good, bad, the ugly, or anything like that below. I'd love to see what you have. Any type of feedback, I'd love to respond to that. So let's get started with today's video here. So today, we're going to really talk about more on the side of FHA loans as well as conventional loans. There's all sorts of different programs out there, from USDA loans as well, VA loans, and then we can get into the space of the non-qualified mortgages, and also known as non-QM. Those are really for loans that fall outside of the parameters of FHA or conventional, right? So I think a lot of times people start off looking at home loans like an FHA loan or conventional loan, and then from there, they can figure out if they don't meet those programs. You can work with a mortgage broker that have access to, a variety of different programs that fall outside of those types of guidelines. Like, for example, we have relationships with over 200 of the top mortgage companies in the country, and we're talking thousands upon thousands of programs. So not every type of loan is going to be the same type of guidelines. I'll give you an example. If you're familiar with like a bank statement program, there's thousands of different bank statement programs, a lot. All I'm saying is a lot. I don't have the exact number, but there's a lot of different programs in terms of somebody offering a bank statement program. So not every bank statement program is going to be the same, because, every investor, every wholesale lender is going to have their little ways of providing that type of financing. That means there's different guidelines for every type of lender. And then I know a lender that has like maybe, let's say, 5 different bank statement programs within just being with just being offered at that company. And then there's ways to structure it several different ways within those 5 bank statement programs. So if you really dissect it, we're talking, 20 to 30 different ways you can structure that bank statement program. And then, so if you look at it, that could be 20, 30 different bank statement programs per wholesale lender. And I've seen even more than that. So finding a good loan officer that knows ways to underwrite your file, and also finding, loan programs that fit your criteria to make sure that you're getting the best possible rate based on your current situation is really important. Today's video is more about credit scores, FICO scores, right? And specifically, like I mentioned, on the FHA loans and conventional loans. So let's kind of go through that. And I'm going to have a lot more posted on the blog. So please take a look at that. But I'm going to go over, for the most part, what they look for as far as the minimum credit scores. And every lender could actually have what they call a overlay. And what an overlay is let's say FHA says that there's no credit scores requirement, okay? But a particular lender or bank can say, hey, we don't want to offer any type of loan programs under 640 FICO score, right? So there's companies on the internet that do this. They just want to not work with those type of buyers, unfortunately. So there's companies out there, and I don't want to mention any names, but they're out there. They're very common household names, right? And so if you don't get qualified, my suggestion is always just getting a second opinion. And even if you are happy with your lender, why not get a second opinion, right? A lot of times people start off going to their bank, and because they feel safe, secured going into the bank. But in reality, that bank is very limited on the programs that they have to offer, including the financing that you get, like the interest rates and the terms, because it's only what that bank has to offer. So those credit scores a lot of times could be higher requirements, because that bank or mortgage company just wants to only focus in a certain type of credit. But on FHA, I've done loans as low as 500 FICO scores, but traditionally most lenders can, will offer anywhere between a 580 minimum to 620 for FHA. It's very common that FHA will allow 3.5% down payment down to a 580 FICO score, but they'll even go lower than that. It's just going to require more down payment in order to get qualified. So I'll give you an example. Let's say if you have a 575 FICO score, FHA will do that loan, by the way, but it's going to require 10% down. That is not an overlay. That's a guideline strictly from FHA HUD, right? So anything less than a 580 FICO score, if you're at a 575, it's going to change from a 3.5% minimum down payment down to 10% down payment, because a minimum FICO score for FHA with 10% down is 580. So anything below that, so if it's a 579, actually, let me rephrase that. So if you have a 579 FICO score, it's going to go from 3.5% down payment to a 10% down payment. If your score was at a 580, now you're at a 3.5% down payment. So I just wanted to clarify that. So think about that. There's a lot that goes into calculating a credit score, right? One thing is that there's a difference between credit companies out there that offer a credit report. Your standard stuff that you see online, or maybe that you downloaded the app on your phone, is not the same report that lenders use, because lenders use only what they call a tri-merge mortgage credit report. This is specifically for mortgages, and you can only get that type of report through a licensed loan officer. This is not something that you could just jump online and get. You have to go through a loan officer to get, and those prices do vary a bit. We've seen prices increase over the last year or so. I remember just not too long ago, credit reports were $20, and this is not a long time ago. And now I'm seeing them up as high as $125 per tri-merge report. So if you think about it, there's three reports when we say a tri-merge. There's an Experian, Equifax, and so you get the Experian, Equifax, and TransUnion. So those are the three reports. That's why they call it a tri-merge credit report. And what they do is you're going to get three different scores, right? And those scores will determine if you qualify for not or not. And they take the middle score. So let's give you an example. You have a 620, 575, and a 580. The middle score is the 580, and that's what the underwriters are going to use to underwrite your file. They take the middle score to underwrite and approve your loan. So that means all the guidelines are based on the middle score. It's really important that if you think about buying a home in the next 3 to 6 months, is that you actually want to get a copy of this mortgage report. And there's two types of report out there. There's a full report, and then there's what they call a limited report. A limited report is what they also known as a soft pool. And the soft pool's limited. Like, it doesn't sometimes have all the information on there. And I think it's a great way to start off. But if you're real serious about buying a home in the next 3 to 6 months, I say get the full report, right? Pay the extra dollars, extra money, so that way there's just no surprises in the process. It's really important because I've seen people, some of my clients have high FICO scores, above 700 FICO scores, and thinking that they got great credit, but when you run it through the underwriting system, it doesn't give them an approval, because it's not just only based on their credit score that's going to determine if you can buy a home or not, or get approved, right? There's a lot of characteristics that go into that. And these are the types of characteristics that the underwriting system or automated underwriting system looks for. So I'm going to just call that an AUS system. So just imagine, we get all your information, we get a full loan application, and we upload it into the AUS system. And that AUS system is going to underwrite the file electronically based on your credit, based on your employment, your income that we put in the system, also based on your trade lines, the length of trade lines. So there's a lot of different criteria. It's reading the entire credit report to make sure that it's going to qualify that person based on the information that we put in the system. And so that's why I've seen credit scores, over 700 FICOs not get approved based on all those other criteria is because it's just more than a FICO score. So if you're thinking about buying a home in the next 3 to 6 months, it's really important to get that full copy of that credit report if you want to avoid any type of surprise, as well as making sure that you have a competent, very competent, right, loan officer reviewing that with you to make sure there's no errors on the report, and then also getting that AUS system to run it through the AUS system to make sure that there's just no surprises. But the AUS system is only as good as the person that's entering the data in there. So I like to say it like this: garbage in the AUS system, garbage out. It's not very reliable, right? When you have something in the system is not 100% accurate, because a slight change in the system, that the information that was put in the system, can change if you get an approval or not. I've seen it happen. This is why having a very competent loan officer, review your file before, they submit it to the AUS systems, just to make sure that there's not going to be any changes, because at some point in time, the underwriter is going to review that file. And if there's any changes, they're going to go and make changes in the AUS system, rerun that approval. And I've seen times where, it wasn't done correctly. Now they fall out of escrow, right? So to avoid all that, find a really competent loan officer. They know how to underwrite your income, your tax returns. They're going to review everything as if the underwriter is going to review it, and then put that information into the AUS system. Now we're not putting garbage in, we're putting good information in, and good information is going to come out, something that you could totally rely on, in the next coming months. And it's also important to note that if anything changes along the way from that original application, make sure that you reach out to your loan officer, update them on any type of status, credit, things like that. So definitely want to avoid any type of purchases, getting new credit cards, getting new car loans, or if you have a lease car payment, like a lease automobile, and that lease expires, make sure you talk to the loan officer on how to handle that. It's almost like talking to your tax professional before you make drastic decisions, right, on your finances. Talk to them, because they could probably help you with your taxes. Same thing with buying a home. If anything changes with your credit, make sure you're talking that over with your loan officer so they can properly guide you. I've been involved. I've probably reviewed thousands upon thousands of credit reports, thousands upon thousands of AUS findings. So a really good person is going to know, if I put this information in the system and I made these changes, I'm probably going to get XY results, right? And that's what you're looking for. You're looking for somebody that really knows the business. So that way there's just no surprises when these changes happen, right? Because, a lot of times when you're buying a home, things do happen, right? Things do change. A big one can change, like such as employment. Sometimes changing employment is not a big deal, right? But again, you want to review all this information with a really good licensed professional loan officer, especially when it comes to your credit. On conventional loans, this is where these are loans that are backed by Fannie Mae and Freddie Mac. A lot of times you see more favorable interest rates, but those interest rates get more favorable as your credit score increases. And I would say the best pricing starts right around 740, but sometimes you have to kind of weigh your options out, right? Do you buy now or do you buy later, just because of the different FICO scores? Well, maybe there's a window of opportunity where the interest rates dropped slightly and you got a little lower score. And if you wait until those scores increase, you're not going to have that same interest rate. So it could cost you thousands upon thousands of dollars by waiting, because now, yes, you got a higher FICO score, but think about it. You're paying for that FICO score to go up because now interest rates went up another 0.25%. Maybe it only impacted it by $50, but think about that. Times that by 60 months. What did you really pay for that higher FICO score? It may cost you. What I realize is that no one can really predict the interest rates. I've been doing this for 2 decades, have not been able to find somebody, including all the economists and all the things that I study, and I keep an eye on the market. I keep an eye on the mortgage-backed securities. I keep an eye on the 10-year treasury bond. I keep an eye on these things every single day. But still, it's very tough to figure out if interest rates are going to go up or go down. We do get some sort of, indication in the market. But what we're talking about is it going to be going up in the next 30 days, 60 days while you work on your credit? That part, no one really truly knows. But when it comes to day to day, I monitor the key indicators to tell me what's going on in the market, right? So keep in mind as you start planning on buying a home and start weighing out your options. Should I buy now or should I work on my credit, right? Working on credit can really cost you a lot more money. I've seen this happen during COVID where, 2020, everyone's thinking, I'm not going to buy a home because of what's happening. While they were thinking that, interest rates were coming down, dropping from 5-6% down to 3% and sometimes even 2%. And it had a major impact on the demand in the market. Well, when you increase demand with the low supply side, prices are going to skyrocket. So in some areas, it went up to 20-30% of home prices in some of these areas. So as now you're thinking that you're working on your credit, well, home prices just went up, $50,000 or $100,000. So it could have cost you $50,000 to $100,000 by working on your credit, where somebody would have just jumped in and bought their home during that time frame, could have saved them a lot of money, right? Even if they've got a higher credit, a lower credit score, right? So the cost of waiting sometimes could be through the roof. I mean, think about that, $50,000. And I've been in those situations personally, right? Waiting on the sideline, thinking I'm going to go buy another house one day, waited a couple of years, and before you know it, the home prices doubled, right? So that cost of waiting cost me $200,000-$300,000. Think about that, right? That's a lot of money. So I hope by watching this video, if you could learn anything that, maybe things to avoid or things to be aware of, and I'd love to hear from you. If you can just post a comment below, I'd love to hear more about your takeaways on, or even types of questions that you may have. Please feel free to post a comment or even just shoot me an email or visit us on our website at freedomchoicelending.com. My email address is david@freedomchoicelending.com, or you can always shoot me a text at 866-587-6927 with any type of questions or anything like that. And by the way, if you're thinking about buying a home, if you want our ultimate home buyer's guide, it's a great 18, 19 pages that I put together along with 9 steps on becoming a homeowner. Just shoot me a text at 866-587-6927, and we'll get you a free copy of that. And it's really great to have as a guide that you can work on this at your home. And even maybe a licensed loan officer or your real estate agent can actually help you through this guide. So that way you can have a stress-free, hassle-free transaction. And also it will prepare you for homeownership, right? Once I realized that preparation always meets opportunity, confidence, when people have confidence, success happens, right? And part of my hopes for you by watching this video is that you have success buying your home, right? Whether this is your first home, could be your second home, or an investment home. Just having a better experience this time around than last time. And I believe that this guide is going to help you do that. So by all means, there's no cost for this guide. I believe it's going to help you with this home purchase. And also, if you like to set up a mortgage plan call where we're going to go over the prices, monthly payments, go over all the various closing costs, right? And really help put a plan together. There's no cost for this. There's no obligation. All you have to do is just shoot me a text or give us a call. We'll do this right over Zoom or just right over the phone, whatever is convenient for you. We'll work around your busy schedule. Just give us a call. And I want to thank you for watching this video. And please, if you were able to get anything out of this video, please post a comment, or maybe you may know somebody that's buying a home. Please share this with them as well. I want to thank you for watching. It's been an honor to serve you by creating this video. I hope you're able to get something out of it. I want to again thank you for watching and have an amazing day. Bye-bye.